And good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, September the 20th at 10:15 a.m. Pacific Daylight Time. I am going to, as always, start here on the SPX, and let me open that up to my maximum monthly chart. Actually, let's see if I can get my maximum monthly chart. I'm actually on my laptop. I am not actually in my own office right now. So, and we're going to slip out to the monthly. There we go. Let's see if we can get that. There we go. So the screen is going to be a little bit smaller, and I apologize for that. Right now, I just want to quickly review that there are no changes on this monthly chart. So I'm not going to spend a whole lot of time here because it's kind of not showing things properly. But just so that we understand, the S&P 500 on my regular computer, we got data that goes back to 1928. So there's quite a bit of data. And so we're on Grand Supercycle Wave 3 and Supercycle Wave 3. And we're getting ready to finish cycle wave 3. And that cycle wave 3 has been in force since, let me see if I can get this to open. Nope, not going to open. Since 1949. So it's in itself has been in progress for quite some time. So let me go here. Let me go to my time frame, see if I can't open up the 5-year. Somehow this is not showing up on my charts. So here, so in other words, it's like within this cycle third wave, it'll consist of 5 waves of primary degree, of which 1, 2, 3, and 4 are complete. So we're in primary wave 5. Within primary wave 5, there'll be 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. So we're within intermediate wave 5 of primary wave 5 of cycle wave 3. Now, within this intermediate fourth wave, which began in October of 2022, there will be 5 waves of minor degree, again, which 1, 2, 3, and 4 are complete. Minor wave 4 finishing up on April the 7th of this year, 2025. So we're in minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. So, and we're close. So within this minor wave 5, and now I'm going to go down to my daily chart. So within this minor wave 5, we are also counting up 5 waves, but of minute degree. And so where we are, minute 1 and 2 are complete. And this is where I've made some changes. And I showed them during last week, within the ES. So now updating the SPX chart, I have flipped prior, this mark here was minute wave 3, and this was minute wave 4, and it was that running fourth wave. And I had listed it as a minute degree. I've changed that, bringing it down a degree. So we're still within the finishing stages now, by the way, of the minute third wave. So let me take it down off of there and go here. And again, it's not saving my time frames, and I apologize, but that's what the little computer doesn't like to do. All right, so go down, and now I'm going to have just a 30 days, so I'm going to show more. So there is the minuet fourth wave, and that was all a part of that running fourth wave. So we're in minuet wave 5, and within that, again, we're always going to be looking for 5 waves up of the sub-minuet degree. So we have 1, 2, 3, and 4 complete. Wave 4 completed on the 17th of September. So last week, we completed this internal fourth wave within this minuet wave 5. Now, minuet wave 5 is going to complete that minute third wave. So that's how close we are to just completing that third wave. And so we're inside the subminuet fifth wave, which once it's complete, will complete this minuet fifth wave, and then again that minute third. So we still have both a little bit larger correction staring us in the face. And so just to kind of get into here, I am going to go down to the 15-minute chart. And so we can see here, there is wave 4. And so we have 1, 2, 1, 2, 3, 4. And we're going to have a 5 of 3, and then another 4 and a 5 to complete this fourth wave. Now let's go back out to that daily, excuse me, the hourly, and open this up to the 30 days. And I need that 30 days and say, okay. And so, because what I want to do now is I'm going to connect and I need to just, that's putting that up and I don't need that. So let's go here and we're going to put in our fibs for that fifth wave. So we're going to go connect there, up over to this fourth wave. And so we have some levels. Let me just get this done. And I'm doing this way because, number one, I wanted to show you what my process is, so you know how we're going to continue to build our fibs on the way up. So I'm just going to set the color and set this here as such, and then move this up. It should actually go one more. There you go. I will put that in, also changing that, and then we're going to set it. And we've gone through that. So let me just put this out here as wave 100%, and then a little bit more. And again, because it's a fifth wave, it's just the most common fib is going to be 100%. And that's at 67.28. So in the SPX, 67.28 may complete, because it's going to fulfill the fib level, and then complete this fifth wave and that minuet fifth wave, and then in turn, the minute fourth wave. Now this one is one, I'm sorry, I need to change that. I need to edit this because that's in the wrong color. It needs to be in this color, and this needs to be in this color. This is wrong. So let me put that down there and change this guy as well and say, okay. So what we have up here is this. We have the subminuet fifth wave as at 67.28. Then the minuet fifth wave would be 618 of wave 5, which is also third most common, but because of the nature of how high we're getting, it would come into play. And to be honest, I think we have 67.28, that's 100%, 67.60, which completes this fifth wave. But if we go full bore here on 1.618, so that's most common. This is second most common, 1.618 at 68.36. So it makes more sense that since we closed on Friday at 66.64, that even a run up to 67.28 is a good run for the SPX. And so that's the level I'm going to kind of be looking for. And if we get a little bit more, we have additional resistance at 67.60. So that's going to be the cluster. That's a little bit of a cluster where I'm going to be looking for, at least via the SPX, this subminuet wave 5 and the minuet fifth wave, and then that minute third to finish. Now, what would that suggest? Well, then we, of course, would be looking for that fourth wave. And I'm going to go back out here. Actually, don't need to. I just need to go back up to my, yeah, it's not saving it. So let me just move this. Give me some more time. Come on. And we'll go out to the 30-day again. I don't know why it's not saving it, but we'll figure that out later. So again, once we're done with the minute third wave, we're looking for our minute fourth wave. And then accordingly, what Elliott tells us is that the fourth wave will find in motion, the fourth wave will find its terminus or its endpoint within the price territory of the fourth wave of one lesser degree. Well, that's right here. So we actually have this coming down to about 63.50. I'm going to use 63.50, although it's actually 63.60. So we got a little bit of a window down there, but that's where I'd be expecting it. And if we're going to get up to above 6,700, well, that's a pretty strong correction. And so I'm thinking that, first of all, we have the buildup to the end of the quarter expiration, which is on September the 30th. So that's going to be a week from Tuesday. So, we've got that buildup, and I think there's going to be a lot of adjustment, a lot of things going on in preparation for that. What wants to roll, what's going to get, built up as we move into that fourth quarter. So we're still going to see some changes, and I think we'll see changes like within the Mag 7, within a lot of the more powerful stocks that have had really strong runs during this third quarter. So all that being said, I believe that the basis or the bulk of what we're going to see is going to be to the downside. But again, this fourth wave, this minute fourth wave, will take an ABC structure. Now, that's what we're going to start with. But understand that in a correction, particularly a fourth wave correction, there are between 11 and 13 variations that the market could do. They could put out here. And if that takes place, it is going to be a little bit more difficult because we have to let it all play out before we can really determine, is it going to be just an ABC down? Is it going to be a 535? Is it going to be a flat ABC? And within that flat is where we get the additional possibilities. And what those are, is it going to be a double ABC, a triple ABC? Is it going to be, and if we're using the new terminology, it's a WXY, and then maybe XZ. So, that would be a double or even a triple ABC. Now, or if it's going to be a flat, what we consider a flat ABC, which is where we get the A wave, the B wave does not really go beyond the A wave, and the C wave doesn't go beyond the start of the A wave. So, or the completion of the A wave, and that produces the flat. But a part of that flat family are the triangles, the diagonals, the irregular B wave. So all of that still would be out there, and unable to make that type of a forecast now or even a decision because we don't know how it's going to start. Actually, we don't even have the completion point yet. But understand that we do, in terms of that fourth wave, we know where it's likely to come back to. So no matter where it finishes, whether that's going to be 67.28, 67.60, or it goes full bore to 68.36. So we could start next week with some decent rally. Now, we might get a little bit of pullback come on Monday, and that's just going to be because the market's coming out of that expiration, the monthly September expiration that we had on Friday. We did see an awful lot of gamma come off the market, and that really happened pretty much in the SPX on the opening on Friday. And then we had a little bit of a push after that, but if we all go back to how things traded, market basically traded in a smaller range for the balance of the day. We had some up and down, and then right at the end of the day came where we want to pin it type moves. And then we had a pretty strong finish to the day where the market rallied up to again, new all-time highs, and then kind of backed off in that extra hour. So having said all of that, I am going to continue at some point to watch and see for the market to begin to rally again, bringing this down to the 15-minute. We can go inside. And if I do that, this is the 4, the sub-minuet wave 4. And so I have 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of this. So this is counting 5. So 1 of 5, 2 of 5, 1 of 3 of 5, 2 of 3 of 5, 3 of 3 of 5, 4 of 3 of 5, 5 of 3, right? Then another 4 and a 5 to finish that sub-minuet fifth wave, the minuet fifth wave, and that minute third. That's what we're looking for. And again, upwards into this area. So we still have a little bit more upside to do. So again, not really looking for the market to slide from here. If it does, we'll figure it out. But right now, the momentum is to the upside, and I think that we might see some follow through to the upside, at least to get this third, fourth, and the fifth done, to get this fifth done, and everything all the way up. And then we'll start that larger correction. All right, let's move over to the ES and take a look at that. And go back out to, let's go start here, because this is basically where I want to come in. And so again, there is the intermediate wave 4. So we're in intermediate wave 5. Here's minor 1, 2, 3, and 4. That also April the 7th of this year, completing minor 4. We're in minor wave 5, of which 1 and 2 are complete. I'm going to come back down, go to my time frame, and let me go over here again, and I'm going to bring it down to my hourly, and now get my 30 days up there. All right, so we'll go from there. All right, so here we have it. So here is the minuet 4. And so we're in minuet wave 5. It'll have 1, 2, 3, and 4. So we're in subminuet wave 5 of minuet wave 5. So what are we looking at inside there? Well, we have, again, it starts to break down, because this smaller fifth wave will have 5 waves of its own. So now I'm going to come down and take a look at that 15-minute chart, and then we got the same deal. We have 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5 of the 5. So I know it's a lot of up-down motion, but that's going to finish this wave. It hasn't been easy. It hasn't been easy. We had that, and looking for a wave 2 that had the possibility to come down and at least equal this. It didn't. So on one way, I can look at this as like A, B, and then a C wave down to here, and then 1, 2, and a 3. Or if I'm going to count this as the second, and we had some failure in here, then I have 1, 2, 1, 2. So either way, I am looking for some additional upside. Now here, we did come down off that high in that additional hour, and we got down to closing at 67.19 in the ES 67.20. So I think I've got some support here, which actually was resistance on the way up. Now coming back down, maybe it'll be support. And I think that'll hold. Underneath that, we have the 20. This is on that 15-minute chart at 67.14. Maybe that should contain. If we have some additional selling initially tomorrow, when Globex reopens, we might have a little bit of downside, but then the market should continue higher. I would not be looking for it, again, under this current count. If this is 1, 2, 1, 2, 3, that fourth should not come down below there, which is 67.12. So again, the market itself kind of boxes itself in terms of, like, on an Elliott basis, what it cannot break. But again, if I have to go here, and then I could say this is A, B, C, the C wave ends in a failure. But again, here's the deal. If I take this over and I look at the line chart, what you're going to see, still a failure, but not quite as big, but still a failure. And that's not the most uncommon thing. And what would wave 5 look like? Or the C wave, excuse me, what would the C wave look like? It kind of looks like a diagonal coming down. But again, sloppy. It was difficult, no matter what type of chart that I'm looking at. A line chart, which is on a closed basis, a bar chart, which includes all of the extremes. So I'm leaving it right now as 1, 2, and then 1, 2, and then 1, 2, 3. 4, 5 of 3, 4, 5 of the other 3, and then 4, 5 to complete this fifth and this fifth, and the minute third. What am I looking for? Well, I'm thinking that we have 67.79 to 67.82. So let's call it 67.75 to 67.85. Above there, And again, that's where this fifth wave will be equal to the first wave, most common. This is where this third wave would be equal to the first wave, also common. And to be honest with you, I probably would allow it, even if it got a little bit more, which I think it could. Well, then it fulfills all of that. So I'm kind of looking for the third and possibly uh, this third to complete up here. And then we get a little bit of a pullback and come back up. And then right about the same area, I wouldn't be looking for much, that I think we can get this fifth completed. And then that's also going to complete the minuet fifth. And then we're going to finish that minute third. Now, if we get a stronger rally and we start busting up through these resistance areas, that's also going to be very possible. And the main reason why is that we are in uncharted water, uncharted territory. These are new all-time highs, historic all-time highs. So each time we move up and beyond, it is into an area where it's like, well, where's the resistance? We only have our fibs that kind of go. And then people use multiples, and people use different multiples to get different fib levels. But it continues to basically adhere. Basically, why? Because algorithms program that in. So they get to make changes, they get to make turns at particular levels. So, we're just going to have to roll with it and look at all of our possibilities and understand that if we break, does not necessarily mean we go all the way to the next level. So in other words, if we break above here, it doesn't suggest that this third will go all the way to 68.46, because it certainly can complete in here. The same with this fifth. Doesn't mean that if we break this, which I'm assuming we're probably likely going to, doesn't mean that it automatically opens it up. It does open it up to go there, but doesn't require it to go there to complete the whole sequence and then up to that minute third wave. Now, once again, once we're done with that minute third wave and we're looking at that minute four, then I want to just kind of return, get my other time frame going here, and let's take a look at that. There's the previous fourth wave. So in the ES, we're basically looking for it to come back into this price territory, but that's the low. And oftentimes the terminus is going to be where that low is. And right now, that's at 63.88. So in the futures market, we should have some strong support. But again, here's the deal. If we get up above 67.40, new all-time highs, sure. If we get up above 67.75 to 67.80, and then we're looking for the market to turn around and come back to 63.80, well, that's a pretty big drop. That is 400 S&P points. So, and it's going to roll out. I think it could roll out over the month of October. I think we begin, and what could start to really kick it in might be that end of the third quarter, beginning of the fourth quarter. So maybe by then, maybe we could get this whole thing in by then. I don't know. So I'm not going to say with some definity, oh yeah, well, we're going to sink real quick down to the bottom. Yes. Is it possible? Of course it is. This market has been pulling surprises all along this route and making it confusing. We get sudden downdrafts, we get sudden rallies, and I don't expect that to stop until we're done with the cycle 3. And again, even though because this is the weekly and it's the larger picture, understand that when cycle 3 is complete and we're going to start a cycle 4, I don't think it might just begin because of it just started to drop out of its own weight. So in other words, the weight of how high the market has gotten begins to pull it down because it's overbought, because the individual companies are overbought. And maybe we'll be moving into the third quarter earnings coming out. And maybe that'll start to really kick it down. And again, all adjustments all along the way, and things will produce itself. There's enough things happening geopolitically that could really disrupt the markets, or just throw caution into the market. Yep, we got our interest rate cut, just as the market had already baked in. That's now on the books. But that doesn't guarantee additional cuts, and it doesn't guarantee that inflation will not continue to creep back in. So again, we still have a lot of facts or givens that are unknown right now. We have some expectations, we have some forecasts for what other people think. But again, I am looking for additional upside. And it's kind of coming in against the odds if you think about it. You know, are we operating on all cylinders? Do we have everything smooth all the way around the globe? Or are there geopolitical situations which are explosive, which are very explosive? Yeah, we do. And so I'm not going to forecast that. I'm not going to say, well, that's going to be the reason. I'm just saying that the reasons that could come via the news exist. So a sudden turn could happen. An acceleration of a turn can happen. And so I just need to, I am going to be following the Elliott and looking at both sides. And that's kind of what I'm doing. So here we have, I'm reaching my, the completion point of what I want to say. Again, on Monday morning, I will have updates for all of our gamma levels as how we came out of expiration, what we went through. I know on one hand, within the ES, and I believe also in the SPX, we went through a call wall, and we ended above the call wall. Market started to come back, but strong finish. And so what are we going to be looking for? Monday, I think we might get some follow through. Oh, we have that. But again, I will have those revised levels on Monday morning. And so this is where I'm going to end that. I'll also be updating all of the news, all the numbers that we're expecting next week, so that we can start looking at how that can coincide with some different things that may come up. And in the meantime, thank you for your time. And our next update will be the morning update on Monday.